Well, thank you for staying with us. It's time to review trading activities from the floor of the Nigerian Exchange Limited, and an equities trader with Rostrum Investment and Securities Limited, Mr. Dele Sanusi, joins me to do this. Good afternoon, Mr. Sanusi. It's good to have you on the program.
Good afternoon to you, Loke. Thank you for having me this afternoon.
Wow, the market is back in red. What is happening?
Today, it is somehow expected. Well, what is really happening is profit taking. You are going to see that the stock that lost weight today is, we have the likelihood of First Bank, Dangote Sugar, Flour Mill, all these stocks they have been gaining. So people themselves are just trying to get profit and to maximize to get profit. That's what really happened today is just profit taking. That's just the profit taking.
So what about the impact of the external economy? Many say the externalities are also affecting trading in the market.
Yes.
We've seen an ease in inflation. What do you think is happening around that space?
Yes. We see the inflation based on the statistic that something has went down. Not only that one, you should know that the rate, U.S. cost rate, the foreign country cost rate, and also, there is a likelihood that, our own rate also will come down. So the effect of all those ones, we are still going to see them before the month ends. So all those effects, we are still going to see them before the month ends. And as I've said before, what happened today is just profit taking. And tomorrow also, we can see something like that. But the investor will continue to reposition themselves at a lower price so that they can maximize their profit.
What about the banks? How are they playing hard in the market space?
Thank you. Like today now, the Fidelity was closed on bid, full bid from the beginning of the trading to the close of the market today. Fidelity was on full bid, and though I don't really know what is really pushing it, but that means that information, there's some information that you see that's not yet public to the market, which I believe when they are public, other investors will join. And if you look at the Senate also, Zenith gain, Zenith close at 37, but First Bank has been moving. He has moved from around that 20-something, and yesterday closed around that 33. So what happened from First Bank today is profit taking. And meanwhile, you should not forget that First Bank have not announced its own either right issue or public offer. So those are the things that the investors are still trying to digest before they can reposition in the market again.
Before I let you go, do you think that we are gradually getting investors' confidence back into Nigeria's market? It's key.
Yeah, that is a very hard question because one of the things that is very important is our dollar, the exchange rate, the FX. Is really have to be enough FX? Is it stable? Not only that one, our economy, if you look at the issue of the fuel, has something being settled, because all those things, those are the things that the investor will put into their equation before they put down their money, because before they allow their money to come into our economy, because they are going to do their due diligence, and they need to look at the economy, the current status of the economy before the ease. Because investors normally look for the ease of their their funds. By the time they want to, take the money out, is there liquidity for the FS for them? So that's the thing they are going to look into before they bring in their money into our economy.
I must thank you so much, Mr. Dele Sanusi, equities trader, Rostrum Investment and Securities Limited. We appreciate your time on the program.
Thank you, brother.
All right, let's take you outside our shores. The dollar bounced. Long-dated bond yields were up. A nation stock surged after the Federal Reserve's announced a 50 basis points rate cut and flagging a measured easing circle ahead, leaving a path to a soft landing for U.S. economy. The S&P 500 hit a record high overnight, and although it closed slightly lower, futures rose 1%. Through Asian Day, and Nasdaq futures rose 1%. European futures were up 1%. FTSE futures climbed 0.8%. Japan's nickel jumped 2.3%, and stock markets in Australia and Indonesia hit record highs, while bets and stimulus was underway in China, which drove down Chinese bond yields and sent Hong Kong and mainland equities indexes up. In Asia, growing expectations of policy easing drove down Chinese bond yields and lifted the blue chip index by 0.7%. With Liquan property stocks leading gains, Hong Kong Hang Seng jumped 1.9%. MSCI's broadest index of Asian Pacific shares outside Japan climbed 1% to 3 weeks high. At the same time, South Korea returned from a holiday with heavy selling in chip makers after a downbeat Morgan Stanley note that halved SK Hynix target price. The Federal Reserve said it is quoting its benchmark interest rate by 0.50 percentage points, marking the first reduction in 4 years and moving to ease borrowing costs as consumers are grappling with high rates from mortgages to credit cards. Fed says the cut lowers the federal funds rates into a range of 4.75% to 5%, down from its prior range of 5.25% to 5.5%, which has been its highest level in 23 years. The half-point move signals that the Fed is acting aggressively to keep the U.S. economy from stalling, given the historically most rate cuts are 0.25 percentage points.
As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance, and we are attentive to the risks to both sides of our dual mandate. In light of the progress on inflation and the balance of risks, at today's meeting, the committee decided to lower the target range for the federal funds rate by a half percentage point to 4.75% to 5%. This recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we begin the process of moving toward a more neutral stance.
Chinese technology giant ByteDance, the owner of TikTok, has denied report that it plans to design and produce 2 types of semiconductors by 2026 to cut reliance on leading U.S. chip designer Nvidia. The Beijing-based company, which also operates TikTok's Chinese siblings, Douyin, says the initiative in the field of semiconductors are in the early stage, focusing on cost optimization of recommendations, advertising, and other businesses. Local media reports citing ByteDance statement written in Chinese, the company added that all of the chip projects are in compliance with relevant trade control regulations. The response comes after U.S. tech news sites. The information shows that ByteDance is planning to engage Taiwan Semiconductor Manufacturing Company, the world's largest chip foundry, to mass-produce 2 5-nanometer semiconductors designed by Chinese unicorn. U.S. trade sanctions have prevented Nvidia from exporting to China some of its most advanced graphics processing units, such as the A100 and H100, which are sought-after components for training artificial intelligence systems. Crude oil prices rose today after a large interest rate cut from the U.S. Federal Reserve, but concerns over global demand lingered and capped gains. U.S. West Texas Intermediate crude is selling at $71.75 with an upsurge of 1.18%. Brent crude futures experienced an upward price review of 1.25% to sell at $74.59 per barrel. Bonnie Light sells for $78.62 with a downward price review of 2.84%. And for the OPEC basket, crude oil dealers are offering $73.57 with an uptick of 1.10%. Well, indeed, that's our show today. Thank you so much for being a part of it. On behalf of the entire production crew, those you can't see and you cannot even see, make some money. I'll see you tomorrow. We'll keep talking business. Stay safe.